So, welcome to the first episode of the Just Some podcast. Shout out to the follower that suggested the name. I think it's dope to go with the moniker. So, pardon the face, I'm unshaven, hadn't had power for, want to say 3 days, but uh, yeah, we're back. So, let's start off with this introduction. So, the purpose of this podcast is two things. One, give you guys the real about the markets and trading and truthfully what it takes. Um, it takes a lot to get through here. And on the way of this journey, you're often going to be scammed. You're going to ride the emotional roller coasters, the ups and the downs. And I tell everyone that I mentor personally, it's going to take you 6 months to a year to fully grasp everything I tell you. Why? I use the glasses analogy. I wear glasses. And if I were to give you my glasses and tell you, hey, I need you to get me home, but you have to drive wearing my glasses, it's going to alter your vision. So you can't trade through someone else's vision or someone else's method. This is where a lot of mentoring and a lot of other programs fail because they don't factor that in. What they do is they give you a system that they created and claim it to be generate this many returns, this win rate, blah blah blah. Problem with that is it's through their lens, it's not through yours. So you as the person going to that person to learn, did they teach you a system or did they teach you the market? Right? Because the market's kind of like this complex puzzle that you got to put the pieces together in some way, shape, or form. So, in my opinion, the best way to teach or to mentor someone is to simply give them a framework of how the market works. Give them the puzzle pieces. Give them the frame. Give them everything. But they have to paint, right? They have to paint their own picture. I give the framework and we work together with you to fill in your perfect Picasso painting, right? It's not Andre's Picasso painting, right? It's not Mike's market making machine. It's the market. Your strategy is your strategy. Though everyone trades similar, everyone trades a little bit different, right? And you have to embrace those differences. So that's the point of this podcast. We're going to shoot the shit. I probably shouldn't curse, but I am who I am. We'll have some fun, talk a little bit of crap, actually probably a lot of crap, and really just create an environment around just who we are as humans, who we are as peoples. We'll talk trading mindset because I think that is more or less money mindset, not necessarily trading. I don't think it should be called trading psychology. I think it should be called money psychology because how you feel about money matters. And it's truly a determining factor to whether you have a boom. Most traders go through boom and bust cycles, and that's just the facts. I'm not going to heavily push my mentoring program on this, right? If you like me, you like me. You don't, you don't. And it's not easy to get into my program either. We have to talk before you come into my own specific program, which I run at chartartisttrading.com. Look, if I detect any red flags, I'm just gonna be blunt and say I can't help you. But if I don't pick up any red flags, and I'm gonna have things that I look for and questions that I ask, then I'm good to go. Cool. I may do a market breakdown segment of just major markets, but I mean, we'll see. We'll see what happens. I don't know if that helps you guys. So again, I'm going to be looking forward to you guys to tell me what you want to see out of this. What to expect. More is just authentically me. You will see me. You will probably see my baby because he is me, and I am not the most professional person in the world. And I'm just going to be me. And I am not for everyone. So if I'm not for you, it's cool. No harm, no foul. Yeah, just it's gonna be raw. So let's talk about Q&A from Instagram. Wrong phone. It's this one. All right. First question, why did you get into trading when first starting out? Um, I'm not going to say the usernames because again, you should be private. So I got into trading first starting out is I was always attracted to trading. I was always attracted to markets. I used to pick up the paper and immediately go to the stock section. I would only watch financial news as a kid. Hate the news. Don't actually like the news. It puts you in a state of fear, but I always tune into markets. I wanted to be a trader. There's a movie called Trading Places by Eddie Murphy that I watched when I was younger, and I think it left an impression on me. And again, we're talking about like mid late 80s, right? Because I'm born in 82. That left an impression on me. But when you tune in, and again, you have to have grown up in the areas that I've grown up. I'm originally from Chicago, and then moved to California. But again, we were never around. When I'm saying we, I'm referring to me and my brothers. We were never really around successful Black people, and I think that played a major part of why we did and why we didn't do certain things. And don't get me wrong, all my brothers now, we're doing pretty well, all of us. But I didn't see specifically any big time Black traders, and subconsciously it played on the subconscious. I didn't think I could do it. So fast forward to I was working a state job at like 20, very young. I was in the state of California, hated it, just fell asleep at my desk and all that stuff. And my buddy came to me with a paycheck he made from a sales position. And again, this is full blown ego. I'm like, dude, I'm smarter than this guy, but I can do this too, right? So I got into sales with my best friend, and it reminded me of sports. So anyway, to tie it in, um, worked worked in sales with this big company for maybe 7, 8 years, and I was just putting money away. Right, almost bought a house. I think right before the '08 crash, we were making money hand over fist. So we thought about buying houses next door to each other. Then the market crashed, right? Thankfully, but I was also throwing money at my retirement, my 401k. It went from like, and again, this is young 20-year-old Andre. I'm still young, but this was 20 something year old Andre. Went from like 75, $80,000 to 10. And then you watch the news and what the news says, oh, the money evaporated, it went out of nowhere. It just vanished. I'm a logical thinker, always have been, even through trauma, just a logical thinker. My mind's very logical. Money doesn't evaporate. It went to someone else's account, right? So getting that brought back the feeling of when I was like 5 or 6 watching this movie. Okay, whatever. Brushed to the side. I got another sales job, working in tech. And the iPhone, when the iPhone first came out, the only app I paid attention to was the stock app. And fast forward again, another market downturn, and I ended up losing some money in a 401k. Can't do anything about it. So from that point, I decided to take the shit into my own hands. So I set out with your typical YouTube baby pips, not necessarily baby pips, because then I want to do options because I had some experience in stock options, just nothing major. Learned calls, puts, spreads, all that, eagles, and just all that crazy shit. Learned all that. Did really, really well. Like I did really, really well. I have to find this screenshot and I'll show it on a later episode. But I think I made like $30,000 in a day. Repeated it the next day. Lost it all the third day. I was like, dude, so I'm not gonna be rich in a week. Great. And then again, instead of crying and all that, There has to be something in my mind. What am I missing? So fast forward, gone through a couple scammers, couple academies that shall remain nameless that are just a flat rip off. Couple scammers, and just through dumb luck, I ended up meeting a man who I'm very grateful for in my trading journey, which is Chris Laurie. I don't trade like Chris. Chris always encouraged independent thought, and I thought he was crazy. But I became profitable under Chris because I was simply buying low and selling high, right? I didn't grasp all the market inefficiency talk that he teaches, but it's helpful. I am actually just now starting to grasp it, and it's making me a more efficient trader, so to speak. But again, shout out to Chris Story, man, because without him, none of this happens. Like zero of this happens. I get emotional when I talk about Chris because I don't know what I would be doing. I definitely wouldn't have had a third kid because I wouldn't have been trading. Pretty sure of it, pretty confident of it. So yeah, I take no Chris Laurie disrespect. If you disrespect Chris, we're gonna fight. Might even fly you out to California. We can put the gloves on. Dead serious. Um, and yeah, and then I had a really nice run when I became full time, and then I lost a lot of money. And I didn't lose all of the money I made. I lost a lot of it. Then I started reverse engineering prices, not prices, but the market and why it moved, why it stopped here, what's there. And then I started to understand there were these things on the chart that are in the market that I can't, you have to bring it out. And it's not a moving, it's just price. And then when you bring price out onto the chart, you see a whole new market. And I took some time and developed a strategy. I stopped trading for like a month, and I would annoy my wife who would leave the gym. And I said, look, the market's going to go up right here. Boom, drastic move. It's going to go down here. Did this for like a month. She said, are you making money on this? I said, no, because I broke down and told her I took the loss. She had no idea how much money I had made. I was keeping it a secret. I wanted to surprise her with a nice house. Didn't happen. And I built the confidence that way to jump back in with more controlled risk and growth over time. But that's the story. I talk a lot, so this is going to be pretty hefty. All right. Same user, what made you persist through it? The tough times to become profitable early on. Fear. My biggest fear is unfulfilled potential. That's just it. If I don't make this work, I have to answer for it. At the time, we only had 2 kids. To my 2 kids, to my wife, and then worst of all, I would have to swallow my pride and go back to the working world. I'm competitive, but I'm competitive now. I've learned to only compete against me and my best because I don't know what my best can be, and my best has no it has no place competing against you and your best, right? Because they're 2 different things. So I push me for me, not for anyone or anything else. But the fact that if I quit, I'd have to deal with it. I'd have to live with it. And plus, I don't quit. I don't quit. If I set out to do something, I'm going to do it. And again, you don't underestimate the power of failure, but don't repeat the same failures over and over again, right? Because you'll start to go in circles, and then that's when depression and all the other shit sinks in. So, yeah. All right. Exploring how you as a person are an actual edge in the market. And if you agree with that, I do. You are your edge because it's what you uniquely see. And I didn't understand that concept. I probably wouldn't have understood that concept without Chris Laurie. I am a logical thinker. So I figured out that the market has a logical process. And then I reverse engineered it to figure out that logical process. Once the process was figured out, the hardest thing was accepting that I'm not going to have a 100% win rate. Right. But what I uniquely see makes me the edge. So once I figured out the market's process, then there's other things like liquidity, which is not stop losses, contrary to popular belief. Um, and again, that plays a big factor in how I see it's unique. Um, and that's my edge, right? I don't teach my edge in my mentoring. I teach the framework that I figured out. And the elements of your trading that you uniquely see that are yours, you you put your edge to that. That's your edge. That's what makes you profitable inside of the framework that is the market. And that's the hardest thing is not many people understand that there's a framework, there's a process that it follows, and you have to follow the same thing. Let's see, any new questions? No new ones. If I were to go into trading, what is really needed of me financially and mentally? I would say not much financially. Depends on what you start with, because I blew a 401k trading options, and then ended up making money in currencies. So it just depends on how you want to start. I would say have at least a year of money of financial bills saved up in the bank before you attempt it. But understand it's probably going to take you more than a year unless you're like some prodigy. And those are rare. There's a couple guys in my group that I mentored that picked it up really quick and that were young and that are trading full time and funded now. Um, but again, rare, super duper rare. What's expected of you mentally? Perseverance and no ego. And again, I'm not talking to you specifically, I'm talking about the process in general. You have to put ego and pride to the side because the market's always right. You and I are not. Just just isn't. So keep that in mind. And again, not you who answered the question, just people in general. Is like you will be required to take a long, hard look at yourself because the way you trade typically is a reflection of you as a human. And that's a hard pill to swallow for some people. So that's what I would say. Have some money saved. Yeah, I didn't. People only show the upside, never the downside. If I start my business, what's the risk? The risk is you losing everything. Like literally, you could like I've heard stories of people whose spouses have walked out on them for trading and just the gambling mentality. I've seen people throw money in the market hoping to make like, just crazy shit. Um, I just forgot the question like that. The risk really is whatever I was. The risk is time, right? Because if you don't make the adjustments, you're wasting time. But this is a skill, and the markets don't change. They're going to do the same things over and over and over again. I've shown this to my crew with crypto. Like whoever created crypto, I'm not going to get into that, but the risk really is time, effort, and if you don't make the adjustments, you're wasting time, and time is a commodity, right? Because our time here is limited. But at the same time, what's the risk of not doing it? You'll never know. And worst case scenario, and can I live with that? Yeah, worst case scenario is you don't make it and you start over. And can you live with that, right? Best case scenario, you're trading on a beach, and I've been on many beaches and I have not seen people trading on beaches. Just that's some social media shit. Um, for me, it's can I live with unfulfilled potential? And that answer is no. I have to fulfill it. I just have to. So that's it for the. I didn't get many questions as I thought I would, but well, I'll definitely do another one. Let's have a look at gotta find it first, but we'll have a look at gold and then we'll call it. Or let's look at equities too. Find it. I guess I did not. What is my trading view? There we go. We'll break down the S&P. And then we'll call it. All right, so S&P, we're going to look at it from a yearly perspective, right? Because I think that is, and what I marked out here, this is from one of the trainings I did in a group, is what I think is, I think it's the yearly range, but let's take a look at price. See, as of now, it's bullish, right? It's been 2 years bullish, one bearish, right? And this is over the last 3 years. Definitely want to watch this high and then this low, right here, right? And here, so this is a logical range. So what can happen is we get a low here, and we can make we'll probably make a higher high. And if we get back beneath here, we're probably going to come back down and try to test this low. Now, if we start to bottom out at a high that we broke, it's going to push for a new high. But then again, that would probably be, what was a 12-hour chart? Oh, wait, was it? Yeah. Wow, Andre. Scratch that. So I think the yearly time frame is too, the price range is too big right now. So we're going to drop to the quarter because the high, we're closer to the low. So then I would be it's too big of a time frame for now. So let's look at the quarterly range. Ah, yes. Here, way better. So looking like S&P wants to test the high of the previous quarter, and that's fine. And this bullish quarter could have just been profit taking, right, off of this quarterly low here. You see, we moved up. So if the S&P can manage to come and tap this high, because again, your major reversal points in any market are going to be highs and lows, no matter what time frame you're trading off of. So I would watch the high of the quarter, and if it makes a new high and starts to price gets back beneath here, look for the S&P to attempt to make a low. But inside of that range, you have monthly highs and lows as well. Now, if we beat this high, meaning we get a monthly or weekly close above here, that changes everything, because the market will shift, the liquidity in the market will shift from bullish to bearish. And we'll start looking at other quarterly highs, right? The main one being here. But again, that's really far off. We take it as it comes. But even if you look in here, again, I'm I'm simply a supply demand zone liquidity based trader, right? And again, but I don't do it like everyone else does. I'm not just going to take an entry here. We got to see what happens here. If we beat these levels, we're coming here because clearly, as of now, I can say for now demand is driving the lower time frames. But when we start to look at the weekly and the monthly, supply is controlling those time frames. So it's likely to stay short, but again, I would say I will definitely watch these major highs and lows that I marked out. Let's take a look at gold. It's kind of fun. And we're going to start the same way we started the last. Ooh, at some point, I think gold's going to fill. But again, the yearly range is a bit of a stretch. And again, that range is just from high to low. So we're going to drop to the quarterly range. That's more reasonable. And I'm going to drop to actually, where's my area of focus? My area of focus. Perfect. We're coming into this one, but I think the stronger levels are in there. But here's the catch. You got to know the weakness of every strategy that you're attempting to trade. The weakness of supply and demand is reversals, because when liquidity shifts, one chain, the algos change essentially. And this is just my own research, my own thoughts from what I've back tested and forward tested it. When liquidity shifts, market shifts, and if you're trading demand, you should probably switch to trading supply. But that's when studying the puzzle of the market comes into play, because you can tell the market's shifted if you study the puzzle. And again, that's up for you. That's up for you to figure out. But just looking at it, gold is typically best traded at highs and at lows. This is just and again, the proof is in the pudding, right? But you'll never know which high, which low will be it. But I will look for gold somewhere in here. But again, it doesn't have to get there. If I'm looking on my personal charts, ooh, it stopped at a calculated price on the dot. This high was calculated on the dot. Um, Beautiful. This one right here was calculated. So if I'm looking at my charts, we'll see what happens. We will see what happens, because the levels on this now tell a little different of a story. The levels on gold now are telling short, but I have a couple major price points that could stop it from getting to major highs and major lows. So we'll just kind of play it out, see what happens. But again, this is how I would actually execute on gold. Again, if gold can get back beneath this weekly high, the previous week's high, you can look for it to shift a bit. But again, because here's a massive weekly demand zone, supply that was so clean, and people are probably screaming, the market's manipulated. No, gold's reversing from a quarterly basis. And I know, because you guys can go back and reference the long that I'm fucking still in. It's searching for a new high, and it may have actually found it. But now the second key for gold to or reverse would be to see what happens here. And then what I wait for is going to happen. You see it's stalling here now. Actually, I want it on the high. Boom. If we can manage to get back beneath there, the supply's in control. And then I wouldn't really worry about these demand zones on the way up, because what will happen is, if this is going to flip, these demand zones will get absolutely creamed. Um, but again, price also determines that. So there's more that goes into it. I'm gonna wrap this first episode up. If you guys need anything, reach out to me. I say that to my group. If you need anything, reach out to me. Um, you can always email me. Just go to the website, chartartisttrading.com. The email's on the actual website itself that you can email me at. Check me on Instagram at justsomepodcast. That's all I got. All right, guys. I hope this was insightful. I'll chat with you soon. Cheers.